Hello, my name is Neil Hudson from Dun & Bradstreet. D&B is delighted to be involved in the panel today on the current trends in the commercial landscape from the Credit Today magazine. I hope you enjoy the debate. Lots of interesting topics have come up for debate in the session, so enjoy the debate.
Well, morning everyone. Welcome to this morning's debate. My name is Marcel Le Guay and I'm the editor of Insolvency Today, which is Credit Today's sister publication. In this debate, we'll be discussing the current landscape in the commercial credit space. So access to finance for businesses and late payment will form key topics. To start off, I'd like each panellist to introduce themselves, starting with, on my left, Lucy Armstrong.
Good morning. Lucy Armstrong from The Alchemists, which is a business involved in helping succession in family and private companies across the UK, but I'm based in Newcastle upon Tyne. I'm also, for the CBI, the chairman of all of their activities to do with family and private businesses.
I'm Paul Ross. I'm Director of Retail Banking at the British Bankers Association. I've got responsibility for all matters on credit and debt for both personal and small business customers. I was author of the banking codes and now the lending codes and principles of practice for small businesses, and a member of the Business Finance Task Force.
Hi, Karen Kelsey, Risk and Debt Manager for Empower, looking after all the SME customers from the actual credit risk to debt collection.
Morning, my name is Phil Orford. I'm Chief Executive of the Forum of Private Business. We're one of the small business lobby groups and have a seat at the table both with government and also with the likes of associations like the British Bankers Association. I also sit on the Task Force Round Table. Our brief basically is to support our members in all aspects of their needs, whether that's finance or HR or health and safety or business development. And we have a very diverse range of members, primarily employers, cover all sectors, all regions, and roughly have about 10 employees each.
Good morning, I'm Kevin Craven. I'm the Director for Corporate and Global Banking for HSBC Invoice Finance. By its nature, my team looks after the larger customers that we have within the business, up to and including FTSE 100 businesses. But I'm also a member of the management board for the business, so in that capacity I get involved with and have an insight into what we do across the board from SME up.
Hello, I'm Stephen Pegg. I'm Director of Commercial within Lloyds Banking Group. That's Lloyds TSB and Bank of Scotland principally as the business brands. We look after small and medium-sized enterprises, but also asset finance, including invoice discounting, factoring, hire purchase and leasing, and agriculture within our business. I chair the British Bankers Association Small Firms panel, on which most of the banks involved in supporting SMEs represented, and I'm a director of British Business Angels Association and chairman of one of the Prince of Wales charities called Prime Cymru, which helps people over 50 start up in business. So that's me.
Thank you. Just before we go out to general questions from the audience, I'd like to ask each panellist a general question first. And that is, what are the major challenges that you face within your respective roles this year? And if I could ask Paul Ross to answer that first.
Thank you. I think for the British Bankers Association, the biggest challenge that we have is to try to get past the anecdotes and the rhetoric and the bank bashing, which obviously from my side of the fence is getting rather tiresome after 3 years. But what we are trying to do is get past the anecdote, get past the emotion, talk about the facts of the situation on the ground, the statistics, the changes that are taking place within banking, but also to educate not only small businesses but also politicians and most importantly probably the media commentators as to the realities of situations, but also begin to rebuild trust between customers and the banking industry.
And if I could ask Phil to talk about the FPB as well.
Absolutely, yeah. I think my biggest challenge representing many thousands of small businesses is actually to get them to engage. We know, and research justifies this, that businesses that do seek and take help and advice perform better and survive longer, and actually implement better business practices within their organisations. For example, credit control, which may seem to many of you here as one of the basic ones, but unbelievably is ignored by many small business owners. So, you know, really creating the awareness of those facts and getting small businesses to engage with us, but frankly with any of the small business organisations, remains the biggest challenge by far.
And Stephen, in your role at Lloyds?
Yeah. First of all, I think whilst we're seeing some growth in output and employment, particularly manufacturing and exporting customers, I'd say one of the biggest challenges is that confidence by businesses to invest, confidence for businesses to come forward for finance, actually, in many cases as well. We've seen net lending growth of 2% in year on year up to the latest period, but we know that there are a lot of people who are holding back from investment because of kind of concerns about the economy. But ironically, if they're going to be competitive and take advantage of the opportunities, particularly in overseas markets, they've got to have the latest kit and so on to do it. Second thing is regulatory change. And, you know, for all of us, obviously we're concerned to make sure that there is balance in capital and liquidity requirements. It affects SME lending a bit less, frankly, because in the grand scheme of a big balance sheet, it's not quite so material. And, you know, we're fortunate in operating in this market that customers have just as high a level of deposits as they have as lending, so it's well funded. But, you know, the other aspects are around the new FCA, second mortgage regulation, if that gets applied to businesses. And then the final thing is to ensure that, you know, as we do see growth, we get a broader balance of finance, you know, between, you know, debt, equity, asset-based finance, supplier finance, and so on. So businesses use that broader range.
And Kevin, in your role at HSBC?
I think what's been pleasing over the last few years is this concept that factoring and discounting is lending of last resort has pretty much gone away now. It's not entirely disappeared, of course, but I think most people that have had some exposure to the receivables finance, invoice finance market, understand the benefits it can bring. And I mean, just last month I was invited in to speak to a FTSE 250 business who specifically instructed their debt advisors to consider invoice finance as one of the funding tools. I think, though, the challenge is there's a difference between it no longer being seen as lending of last resort and overcoming the inertia that's still there within business to move away from more traditional forms of financing, overdraft and revolving credit facilities that they're just more familiar with and more comfortable with. So I think my challenge has been to work as within the industry, as part of the industry, to make people understand and help people understand the benefits that it can bring and the situations in which it is the best form of a financing solution.
And Lucy, if you could give us your perspective from the Alchemists.
I think from the CBI's perspective that actually much of what's been said by the other panellists would be the challenges we would share, and I think are shared by government as well. If we're going to regrow the UK economy, then it has to be the domestically focused private and family businesses that do it. The FTSE 100 have less than 30% of their turnover in the UK, and white van man hairdressers and window cleaners are going to remain very, very localised businesses and probably very small. So those sort of Mittelstand type businesses, if only we had a word in English for them, that are rooted in their local economies, rooted in their local towns, are probably family owned or entrepreneur led. They have to be the route for economic growth. And some of the barriers I think have been mentioned particularly by Stephen in terms of those businesses' approaches to finance are often extremely conservative. Less than 25% of them actually have any form of external capital in their business. So that's staggering that 3/4 of that chunk of the economy, which is about 94% of businesses, only a quarter of them have any form of external finance. So only a quarter of them are using capital to grow their own business and therefore generate tax revenue for the country and generate jobs. So that, for me, is a huge issue. And that's a demand-side issue, not a supply-side issue. And there is the education that Kevin was talking about getting people to understand the range of financial products that might be available. Because, again, traditionally, British business has often gone and bought a house with a credit card and then walked down the supermarket and paid for the weekly groceries with a mortgage. And actually, we need to address that. And I think that's a collective responsibility for all of us, whether we're a business lobbying organisation or whether we're a supplier to business. And linked to that, given where domestic demand is within the UK economy as a whole, export has to be the focus for these businesses. And traditionally, these businesses have been, again, very conservative and quite wary about exporting. So one of my challenges at the CBI is to help government, particularly UK Trade and Invest, actually learn about what's different about a private and a family business that might be exporting as opposed to, say, a FTSE 100 business. So the two things for me this year are access to finance from a demand perspective and an education perspective, and a focus on exports to grow us out of recession.
And Karen, if you could give us the perspective from Empower.
Yeah, I mean, from our side, it's very much around the customers telling us that they can't afford to pay, that they're struggling, they're not telling us early enough. If they were going to tell us early enough, then we could sort of support and help that. I think as well, we're finding that a lot of SME customers are just closing the business down. They're not able to trade anymore, and we're finding out a lot after the event has happened. I think the economic climate around the credit risk, their behaviour, is also having an impact on us as well, especially when we get new customers coming to us, depending on how they are paying, are getting the support externally, has an impact on their credit score, and that obviously has an impact on how we look after them when they come to us.
Okay, I think we can open it out to questions from the audience now. If anyone does have a question, if you'd like to raise their hand. Okay, we've got two at the front here.
Hello, it's Heather Gregg-Smith from Credit Today. I just wanted to ask Lucy, in light of what you were just saying, you talked about export and how the credit industry can help practically. You know, what are the barriers, what are the things the industry needs to put in place in order to encourage export and to make these businesses see it as a viable option?
I think the first thing is actually to educate businesses about the short-term cash flow requirements of exporting, which is something which I think the banks and government have worked quite hard to do with some of the export guarantees and so forth. And that side, I think, to some degree has been addressed in the sense that if you want to do it, here's a mechanism for basically covering the 6 weeks when the container's on the ship, crudely. But I think the aspect where there's still a huge challenge is actually if you're going to have an export-oriented business strategy, you need a different kind of balance sheet and you need a different financial strategy and capital structure than if you are a domestically focused business. And I think all too infrequently, actually, providers of finance of all types perhaps don't offer as much help to businesses in understanding the two sides of the export impact on their business. One is the short-term cash flow and the other is the capital structure. Allied to that, we culturally in the UK, and Stephen alluded to this earlier, have a reluctance perhaps to use equity. Now, I would say this, I'm a former venture capitalist, but I do think that's another area where the credit industry actually you can start to educate your own customers. And instead of perhaps saying either no or no, we're not offering this, there's perhaps a more exploratory area of what kind of shape balance sheet do you need for what you're seeking to achieve. And we, provider A, may not be the most appropriate form of finance for you, but we think B, C or D might be. And perhaps there's a role there in educating customers so that you sell them what they need as opposed to selling them what they come in and ask for.
Did any of the other panellists want to have anything to add to that as well about educating?
Yeah,
Uh,
excuse